Hello, it's John Jannarone, Editor-in-Chief of IPO Edge. Thrilled to have with us today not one or two, but three executives from Meridian Holdings. We have a return guest, Zoran Milosevic, who's the CEO of Meridianbet. We've also got the company's CFO, Rich Christensen, and we also the interim CEO, William Scott. You're going to meet those three gentlemen momentarily. We're going to talk about the rebranding from this exciting company, which is now, of course, called Meridian Holdings, and also trades under MRDN on Nasdaq. Before we do that, a little bit of quick housekeeping. I want to remind everyone that we welcome you to ask questions. I've already gotten a couple over email. We'll get to those towards the end of the program. You can also submit them right there on the Zoom portal, and we'll get to those later as well. And finally, this afternoon, we'll publish a replay in full, and you can check it out there either by going to our website, ipo-edge.com, or checking out the stock ticker MRDN on your Bloomberg terminal, Reuters terminal, or on Yahoo Finance. With that, I'm going to introduce my co-host, Jarrett Banks, who's going to kick off the show. Jarrett?
Thanks, John. William, let's start with you. Can you tell us a little bit about what the company is now with this rebrand?
Well, thank you very much, Jarrett. Nice to see everyone today. Meridian Holdings is, as you know, a Nasdaq listed international gaming and technology platform. Meridianbet, now is fully embedded in the core operating business following the rebrand from Golden Matrix. But I think what we believe is that investors need to think about the company less as a legacy Golden Matrix story, but more as a unified operating gambling business with a large regulatory side to it. A retail and online betting footprint, but with our own proprietary technology. We also, as you know, is that we've got a B2B side, largely led by a Expanse, and really that helps us scale to EBITDA generation. But the key thing for us is that this wasn't a cosmetic change. This reflects the fact that we're a change business. We've moved from an acquisition stage now to a stage which is about execution. We execute, we report, we've got all the controls, the management in place, and capital allocation to make sure that we are totally aligned around this one brand and one global platform. And now our focus is straightforward. We're going to focus on improving profitability, expanding selectively into markets, and where the economics are attractive. We don't go right into markets. We don't chase markets. We go into markets which are worthwhile. And we grow also our margins by using more of our own technology and our own content. And really, we want to strengthen our liquidity and shareholder communication because we really want to enable the market to reassess our business on its current fundamentals and really not on its legacy.
All right. And just to follow up on that, why was it important to align the corporate name and ticker with Meridianbet?
Well, I think it's just really driven. Meridian is the main business. 70% of our revenue comes from the Meridian side of the business, and that's the customer-facing brand and the core equity story. It's a recognizable brand out there, so we thought we got that. It's known out there on the street. The previous identity, we really thought that no longer reflected what the customer, the company had become, and following the acquisition, it created we think a little bit of friction with the investors trying to understand what really we do. So it was that alignment of the consumer who is touching us every single day and what our brand is out there. It also gives a clear understanding to investors where our direction is, and our real direction is driving the Meridian B2C business, but very much with the B2B side to which through Expanse and other elements of our business.
All right, great. Now, can you walk investors through the different businesses under the Meridian Holdings umbrella? You touched on it briefly.
So we got six. We believe we've got six sides to our business. The first and the biggest is run by Zoran, and it's the Meridianbet sports betting and online casino business. We operate in 20 regulated markets. It generates, as we've said, 70% of our group revenue, and it's where the bulk of the people are. And it's got more than 740 retail locations around the world. It processes 15 million bets a day. And the key part of this is, unlike a lot of the operators out there and a lot of our competitors, we use proprietary technology. And that proprietary technology has been built from 25 years ago. And we've just moved on to the latest reincarnation or incarnation of it. So we've got a huge amount of knowledge about building technology and operating in multitude of different markets. A lot of similarities in the market, but so many things are the same, there are a lot of differences. The second part is our B2B division, which is Expanse, which is a proprietary game content business. And I know Zoran will take us through that a little bit later. There's also GMAG, which is our iGaming aggregation business. We pull in lots of games from lots of providers, and we help operators have a single integration and multiple games coming through them. And then we have some other kind of parts of our business, MexPlay, which I think is one of the most interesting and fantastic names for a gaming business in Mexico. It's our regulated sportsbook and casino in Mexico, which is a very dynamic and growing market. We also have RKings, which is a UK-based prize competition business, which is obviously is a very hot part of the market in the UK. Kind of does what it happens is it's a real raffle style business where you can enter into it. And then we have a similar business, but slight nuances to it, which is a membership and trade promotion business where if you enter into a membership, you can get a prize. And that's Classics for a Cause, and that you can win some very interesting old cars, 1970s and 1960s cars. Because in Australia, people are obsessed with your kind of brands of cars. And they each contribute differently. Meridianbet is really the growth engine. The B2B is the technology, and the prize subscription business really add a bit of diversity as well as a steady cash flow generation.
All right, great. I want to bring Rich and Zoran into the mix here. What makes Meridian Holdings a differentiated iGaming operator globally?
Zoran.
Thank you for the question. Basically, Meridian Holdings is a very unique company that operates in every single gaming segment, online and retail, sportsbook and casino. And within that, we are producing our own technology from the scratch, and we're competing also in the B2C and B2B segment. In B2B segment, we are delivering full turnkey solution. And also on the side of casino games, we are also developing our own casino games. So if you think about this mix, it's actually a very unique company, which you will not find anywhere else. Beside that, we operate in more than 20 regulated markets, and it's a footprint that's hard to build. It's product of our 25 years of work. And also, we covered every single continent. So within these 20 markets, we are in Europe, we are in Latin America, Africa, Australia, UK, and continue to execute. So basically, this is in short.
Got it. Yes, truly a global footprint here. How do the B2B technology and content businesses support and enhance the overall platform? This question is for anybody.
This is basically our legacy business in both companies. In Meridian actually started as a B2B company and turned over the years into B2C, and last, let's say, 7 to 8 years, B2C dominates, but B2B is here to stay, and it still brings great results. On the other side, the company that we acquired, Golden Matrix, basically it was all B2B business completely. So basically, we love this kind of businesses, and they are not big in terms of revenues, but they also are not capital intensive. So what they bring to us is fast market entry. Basically, we are entering markets with a local partner, and that means once we clear out all regulatory issues, our market entrance is quite fast and not capital intensive. So our basically strategy is once we enter the market, with, as I said, as less capital as needed. We try to understand the market, try to see is our product good for the market, what is the regulatory environment, what are the relationship with the partner, and if everything goes right, after several years, we tend to acquire the business and turn to B2B business into B2C. And lot of our B2C businesses, actually majority of our B2C businesses, have been in the past B2B businesses, which we just at some point turned into B2C. And that kind of strategy brought us a lot of good things.
All right. And Rich, what role do the competition and subscription businesses play in diversification and cash flow?
Well, as you look at our business specifically, there's a lot of places where the law of large numbers kind of picks up, right? So on one extreme is a subscription business. We have subscription businesses within Meridian Holdings, within Meridianbet, and our Classics for a Cause raffle ticket business is also a subscription-based business. So it creates some recurring revenue streams that are much easier to plan around. They're easier to build profitable, repeatable businesses and transactions. But if you focus specifically within Meridian, of course, Meridian's 70% of our business. It's generating 70% approximately gross profit, and it's growing in the mid 20th percent as you look at Q1 and some of our projections out into Q2. That business, it's heavily dependent on both the casino and the sports book. The sports book is it's kind of the athletic, the outcome-driven event, and so you have effectively a binary outcome across all of these different competitive events. But if you kind of dig a little bit deeper and you look at the casino side, effectively the fact that our customers are growing at such a remarkable way, all of our individual transactions around that casino become much more uniform, and they kind of fall under that normal distribution. They're much more easy to predict. And so you look at that, the competition side as it grows, again, the law of large numbers takes care of us. And then on the subscription side, that recurring revenue stream is also extremely important to us.
All right, that's a great segue to my next question, which is about the first quarter. What drove that improvement in your performance?
Well, if you take the first quarter, I knew we'd get to the financials soon enough. We always do on these things. So if you take the first quarter and you look at revenue, it grew at 17% year over year, up to a record of 50.1 million. This was in line with the guidance we gave in late March. But the growth, as you look and kind of peel the onion a bit, it was led by Meridianbet, which was up 26%. That's what I alluded to in the last question. They were nearly at 35 million of revenue. And the most important thing is as you look at our business and you look at where the growth is coming from our business, Meridian is growing at we'll call it a 70% gross profit, and it's growing at roughly 3 times the rate of the rest of our business in the first quarter. And so as you look at that mix shift of profitability and revenue, it's extremely important as you start moving down the income statement. So as you kind of move down, gross profit grew at about the same rate. It was at 16%, up to about $28 million. But more importantly, we had operating leverage that we've been working on for the last, all of 2025. We took SG&A to where it grew at about 4%, right? There was a little bit of currency in there. But actually, if you take our SG&A, it actually, on a constant currency perspective, it actually declined year over year. And that's the important takeaway, is we're controlling costs. And so what that did is that took a small loss last year and it turned it into about a $3.2 million net income for Q1. Excuse me, it was an improvement. In the current year, there was about 2.2 million of actual net income. Third, if you look at the balance sheet, it is so much better currently than it was even a year ago. Our total debt is down 54%. If you take our net debt and you just back off cash from that number, that's down by almost 2/3 year over year. So that's reducing interest expense materially. And the combination of these three things, revenue growth, gross profit growth, kind of that control of the cost side between SG&A and interest expense, that's really what popped the GAAP profitability up to that 2.2 million, and our adjusted EBITDA at 6.3 million. That was even ahead of where our guidance was, just at the end of March, and that had everything to do with the improvement of that OpEx profile. The last couple of things I'll mention, I kind of alluded to these things because if you dig underneath those numbers, you look at registrations, they were up 41% year over year. That's the true health of this business. That's within Meridianbet. They're up to 428,000. Registration depositors were up 27%. Active users were up 21%. That really gives us a healthy cohort. We know how these cohorts develop. We've been in this business for 25 years. We see, how this lifetime level of profitability is by individual. And so anyway, we see that revenue momentum. We see it moving into the World Cup, which is just right around the corner. And we can see and we know what that's done. I think this is Zoran's, maybe is it your 5th World Cup, Zoran, managing this business? There's just such a wealth of experience here. We just know how it's going to impact the business.
Great. I want to throw it back to William. What are some of the most important milestones or catalysts investors should watch for this year?
That's great. I think one was mentioned, obviously, the World Cup is one of the big ones. It's going to be an interesting World Cup because it is the one with a significantly larger number of games in the group stage. And so that's going to be very exciting. We see the World Cup is always a very, very difficult one to predict what's going to happen. Generally, it's not a big profit earner. It's a way to reignite interest from some of your players. And one of the key things is we have 4 of our operating countries, Brazil, Mexico, Belgium, and Bosnia. They're actually in the World Cup, so that will help be a catalyst in those particular countries. But it is a great acquisition tool and a activation tool. So that's kind of really where we kind of see one of the majors. The other one where I know Zoran, from a personal perspective, is investing a significant amount of effort in it is Brazil. Brazil is we've got a federal license in Brazil, which is through 2029. It is I think, as what we like to say, and particularly Zoran says, it's the largest regulated market in the world. It's huge, and they're absolutely, to say they're passionate about soccer/football is like the biggest understatement. So that's very exciting. And what we have done is we've gone in carefully. We haven't thrown money trying to acquire players at an economic cost. We're going slowly, we're going carefully, and we'll build our position there and to be very successful. And then the other side is, which we've mentioned a lot, is Expanse. We feel very excited about Expanse. We have, it's a great studio. We're producing excellent games. And certifications are processed in New Jersey and Ontario. The amazing part about getting yourself licensed in the US, because it is a roadblock to a lot of there's a lot of studios out there. It's a roadblock to studios getting into there, and there's not enough content for the operators there. There's not enough states at the moment doing it, but the states which are doing which have iCasino are the ones which you make your money from iCasino. Sportsbook is sometimes a bit of a wash. So those are the kind of 3 things which we are going to be focused on for this year, as well as the overall thing is execution on everything, and communicating with our shareholders.
All right, I'm going to turn it over to my colleague John here in just a second, but one more question. What's your long-term vision for Meridian Holdings over the next several years?
Sure. I like the others to come in on that as well. But I think the overall vision is, our long-term vision is a more scaled, more profitable business, and clearly understood global gambling gaming company. As I think Rich has spoken about, this business leverages. So the key thing is growing the top line, getting the benefit of those leveraging, and really focusing on our position in the regulated markets. A lot of people talk about regulation as a hindrance to doing business. We actually see it as an advantage, because it means that it's a barrier to entry. You have to go through the pain, and we really do understand our systems are set up not only from a technology perspective, but having a compliance department who has to deal with all of the filing of the multitude of terrible documents which are expected. And, carrying on the development of our technology to support that. And so really, I think that's where I would see it is our focus, as well as, carrying on the improvement of our balance sheet. Zoran, what would you say is a long-term vision, driving 70% of the revenue?
Yeah, as you said, basically deepening our position in existing market is something what we have most of the focus currently. We are really present in many markets where our position can be much better, and every year we want to improve our market share more and more. Also, we want to make usage and to produce higher margin with the situation that we are actually managing our proprietary solution. Having our own technology in hands means that we really can outperform competitors in that sense, and that's something what we are tirelessly doing every single day.
Okay.
Rich, go ahead.
Yeah,
Rich?
maybe just add a couple of things to that. If you look at, well, let's just talk about our balance sheet, where it is currently and where it was, let's just say a year ago, right? As we move through 2025 was a bit of a reset year. So there was a heavy investment in technology. There was a heavy investment in kind of a geographical expansion. And a lot of those investments that we've made in prior periods are going to pay some dividends. Absolutely. And if you also look at the, I'll just call it baggage, right? From the balance sheet, goodwill, intangibles, a lot of those things that we impaired at the end of the year, that will not be a drag on earnings in the future, right? The amortization doesn't exist. We cleaned that up. We paid off a lot of debt, and so if you kind of think about, everything that William and Zoran spoke about, but then also at the same time, think about our focus on cash flow generation, right? We generated $5.2 million of cash in the first quarter and paid down over $5 million of debt. Again, improving that balance sheet. We're also, reducing the complexity of our balance sheets, and improving governance, communication. We're even broadening the shareholder base as we speak. There is quite a bit of the ownership that's tied up, within what we'll call it related parties. And so what we'd like to continue to see is kind of an expanding both retail, family office, fund participation. And that's something that we're doing around this communication. We're kind of broadening our reach. We're expanding who it is that we're speaking to. I think since earnings, I've probably had phone calls with maybe 45 either funds, like I said, family offices, retail shareholders. And I hope they're hearing the excitement that we have for this business. And especially as we turn the corner into 2026, we're excited about our position in the market. We're excited about our kind of competitive frame. And then some of those macro catalysts that are coming up with the World Cup. It's just a great time, to be, a technology leader, and in the markets that we're in, having a leadership stance. And so, that's kind of how I view the future.
All right. Speaking of excitement, we've got several questions from the audience. So take it away, John.
Great. Thanks a lot, Jarrett. Yes, please keep those coming. We've got a couple in over email. Let me start with this first one here from James. James is excited about Expanse Studios, and he asked, what are the expectations for revenue contributions to the overall company in 2026, 2027? I don't know how specific you can get on that, gentleman, but maybe you can help him out.
Zoran, do you want to take that one?
Yeah. So our plan is to disclose this revenue in soon, so 2027, 2028, definitely. We're very positive about this. This is the biggest revenue growth, the fastest growing business which we have. It's growing 50-60% per year every year. We are currently focused on two things. First is regulatory, because that segment until 3-4 years ago was largely not regulated. And we are now focused on regulations as much as possible to get the license and approvals in many countries where it's actually everywhere where this is possible. So to assure future scalability and also to scale. Currently, we are delivering our content into over 1,000 different domains worldwide. So it's quite a footprint. So we started virtually from nothing like 4 years ago. And so scalability is number one. Then improving quality of the revenue is something what we do in parallel. But currently we are busy to sign as much as customers as possible and get as many licenses as possible.
Great.
But
This
we are
next
very optimistic, and I cannot wait for the time just to disclose the revenue. It's still a little bit early.
Okay, that's a fair answer, Zoran. Coming pretty soon, it sounds like. We'll get more disclosure. This is probably for Rich. Actually, maybe it's for all of you. The question is, you've done an excellent job of taking cash flow to pay down debt, but could that position you for M&A opportunities if the prices are right, or are there other uses planned for the cash, like continued debt reduction / buybacks? Maybe Rich, I don't know, to the CFO.
Yeah, I could take that. There's a lot of ways to return money to shareholders, right? Part of that's you can invest it in the business and allow that growth to accrete to them. We could consider a dividend. That was something that William acknowledged as we had our Q1 release, and we did a Q&A there for the first time in the company, which was kind of nice. We were really appreciative for all those people that joined us for that. But one of the things that we've done in the past is we've used excess cash flow to delever. What that does is that creates optionality for the company, right? As we looked to acquire, as we look to expand through markets, we have a very proven strategy in the past, where we typically do almost a B2B partnership within a region until we completely understand that region. We know that it's going to be successful, and then we do an acquisition. Usually it's an acquisition that's not 100%. We'd like to keep those founding partners engaged for a period of time, and then usually there's like a minority interest roll-up in the future. By paying off debt, you still have the flexibility to, if you need to, you could lever up to do a significant acquisition if needed, although often it's not needed because of the significant cash flow that we're generating. So we're keeping our options open as far as that's concerned. We are weighing, the different avenues of returning excess capital. Like for example, if you look at our current debt, we're roughly, just under $30 million of debt as of the end of the last quarter. That's only 6 quarters based on what we paid off in Q1. And, Q1 is not necessarily even our highest cash flow generating quarter. So, we're looking out into the future, looking at ways to return capital, whether that is through a dividend or whether that's through continued share repurchases. But at the same time, we're also looking at investment opportunities.
Great. Gentlemen, that was
if I may-
comprehensive. Anything to add from William or Zoran?
Zoran?
If I may add, just so basically regarding to your last question, every option is a table. Currently, we don't have any opportunity where we need some significant cash, and even we are in process of several negotiations that are not capital intensive, so we can finance it. And just to understand, so we are still in process of optimization. So Meridian, we want to bring Meridian as it was in the past. So for 20 and something years, we were very well managed company, very conservatively managed company that was always very highly profitable, paying a lot of dividends to their shareholders. And that is something what was a little bit lost during this merger. This merger was really confusing. So whoever knows us couldn't understand what we are doing. What is our name? What do we do? What kind of businesses we operate? And it took us a little bit longer. So merger and the expenses related to merger were a little bit more than we expected. It's the first time we do something this in our life. But our goal is to return Meridian where it was. So conservatively run company, highly cash generative, very profitable, paying dividends at some point, and so on. But still, we are a little bit on this optimization process. It will take us several months. What you see in Q1 is just like result of our hard work, which was done in 2025, just to come to this stage. So there is a little bit more process to go to this optimization to get full control over all processes in the company, and then everything will be great. I think that this merger was really complex one, but it benefited to everyone at the end of the day because we lowered our risk. In the past, we were sports betting and casino company. Now we have raffle business and aggregation business, which actually lowers the risk, overall risk. Because being in gambling, actually, it's like, of course, normally considered as a risky business. So we are every day trying to the risk as much as possible. That is where we're competing in every single segment: retail, online, casino, sports betting, now raffle, aggregation, every single continent. 20 countries, just to not keep all the eggs into one basket. So that is actually what we want to do, just to clear this picture, which was blurred last two years, especially in Europe, where we come from, and we are a very recognizable brand. Our friends were like confused what we are doing. So, but now we are like coming to the end of this process, which I think will be one beautiful picture at the end, the beginning of the end.
Great. A question, this is probably for William or Zoran again here. It's about regulation. In some markets over time, regulations will tighten, but given that you have so many multi-year licenses, could that actually play in your favor if you're well positioned there and you have licenses? What's your philosophy on potentially tightening regulations? Maybe William?
Yeah, so regulation is both we see it as a barrier to entry for kind of casual players to come into that market. Clearly, there is a point you get to where market becomes over-regulated or over-taxed. One example is the UK, where fortunately we're not in the UK. From a gambling perspective, we are in a different segment in the UK with arcades. So there is a side where it gets to over-regulation, but I think what we do is we work very carefully with all of the industry participants to make it into a market which is working for everyone, working for the player, from getting fair returns, getting the money paid on the right time, and also make sure we're responsible gambling. From the operator, making sure there's enough money for us to actually be able to provide a great service. And then obviously from the other side is the government, or whoever the money goes to, is getting a fair shake. There is if a market chooses to over-regulate and becomes difficult for us to work, then we would walk away from that. The advantage we have was, as Zoran pointed out, we're in 20 markets, so there are going to be pluses and minuses around there. And the reality is also that the market is very good at adapting to something which may be perceived as very difficult. For example, in South Africa, where in theory you can't do online slots. And the reality is you can. You just make it into a bet on a slot. So slots exist. The player thinks that they are playing a slot, but from the regulated perspective, it's a bet taking place. So there are ways you can work around it and with it. But we're a fan of good regulation. Zoran?
Yeah, definitely. And basically our company strategy, because we saw gambling markets evolve worldwide from gray area to highly regulated and highly regulated. And our decision was even 10, 15 years ago that let's turn it into our advantage, because basically we will face over the years just more and more regulations. It will never be less and less. So if we just cry about it, we will end up like crying all the time, which is like not good. So basically we just build an infrastructure in the company that we actually are supportive about the regulation, and on the other hand, we are really trying to keep the best possible relationship with the government. Trying to educate all the relevant decision makers what is sensible regulation against unsensible regulation. So when we see sensible regulations, we actually don't mind, and we are very pro. We tend to regulate the fastest way possible. Like we see in Brazil, for example, you have a lot of news from Brazil that about the regulations especially, but this is something what we don't see on the ground. So one thing which is what you see on the media, in the media level, you see it's over-regulated, and it's like there are some calls from the government even to shut it down, to shut down gambling completely, even that is government regulated gambling. But it is not something what we experience in reality. So in terms of operations, what we see increased number of new regulatory requirements, but all of them are sensible. And all of them are faced on making sure that customers are protected and the anti-money laundering procedures are in place, so which is all okay for us. And also when it comes to actually numbers and channels through which we can operate, they are just growing more and more. Brazil, as you know, started as online sports betting only, then over the time developed into online casino as well, which contributes a lot to our business. Now we have retail sports betting and the retail slots, which was like unbelievable that can happen in Brazil. 7 Brazilian states regulated retail slots, for example. So on the ground, being there, we actually see more and more possibilities, despite that in the media you see always opposite, or the situation is dark and it's not repairable, which is not true at all. So we are carefully monitoring and just stick to the facts. So what is really going on? But as I said, at the end, we are very pro-regulation and working with the government to make it sensible.
Great. We've got a question here about a very big frontier market, maybe close to William's homeland. So the continent of Africa, William, as more people have cell phones, can that potentially create opportunity for a company like yours, because it's easier for people to do sports betting and gambling, that sort of thing?
Yeah, and so Africa is, I'm trying to remember my statistics, which I believe it's about 51 or 52 countries with about 1.2 billion. And if you compare the amount of betting which happens, or gaming, this is from a couple of years ago, and it's very difficult to get accurate data out of Africa. But basically, it is relatively underserved from a gambling perspective. So there's a huge growth in that particular end of the market. What happens is that Africa has leapfrogged from getting landlines to computers and gone right onto the mobile phone. And one of the things which Zoran knows very well is that we like a lot of the operators out in Africa, they had what is called not smartphones, but feature phones, where you could use something called USSD. So you basically, with a short hashtag 17 whatever, and you're placing your bets, and that's how the market has evolved from that to smartphones. But the smartphones are not the smartphones which you would see in New York City. There's not many Apple phones out there. They obviously are there, but it's mainly the Android cheaper phones from China. And so there is a huge growth of smartphones. But what happens is, on the back of that, because banking was also very weak, is what has happened is that you've got all the mobile phone companies, M-Pesa being one of the big ones, which is owned by MTN, creating mobile money. So people are very comfortable with transacting on their mobile phone, very comfortable. I would go to a shop and I'll pay for dinner, or go to a restaurant, I pay for dinner, and you SMS the money to me. It's just a natural way of life. So yes, it's pretty much leapfrog. What we have found is that it's very good initially to create a brand there. So you need retail stores. It creates the brand, it creates the knowledge of it, makes people feel comfortable. But as it evolves, you don't have to have as many retail shops as you have in the beginning. But it really is a branding opportunity. We've been very successful in numerous countries in Africa doing that.
Great. A question about a business segment here. Someone's asked, how should investors look at the B2B/software licensing revenue stream compared to, say, a traditional gambling piece of the business? How does the margin and growth profile compare, and which one deserves a higher multiple, if we can ask?
Rich, do you want to take that one?
Oh boy.
No, I can do it as well. Yeah.
It's already good.
Yeah, go ahead, Zoran.
Yeah. So traditionally, as you said, this was a larger segment. Currently, it's low. It's less than 10%. But we are working also, that is one of our businesses which we try to improve a lot in terms of delivering our B2B solution to more clients and improving sales because we changed the product. So we were operating with a product that was good for small and medium-sized companies in the past. And catches in our industry, there is no more small companies, and medium-sized companies are disappearing. So what we have been busy last several years, we developed completely new product that is a good fit for, first of all, for us. We rolled out completely new technology, and since we are very happy with this, we are now busy trying to sell it, but we are just targeting different group of customers. So these are not the customers which we are facing in the past, and that is why we are now reshaping our sales strategy. In the past, it was easy to sell. And you can subscribe a lot of clients, but these clients were generating a small and modest amount of fees, cash, whatever. Now you have fewer clients to sell, but they're all big companies, and the revenue stream can be much bigger. Similar to expense, it takes a lot. Takes a lot of time to establish good distribution, but once you do it, it's like a great business. Actually, that's the business I love most, B2B, and we are doing a lot really in the back just to improve the current sales. Deliberately, these last several years, we were a little put it on the side. As I said, we are developing new solution, and since we are the first customer, we want to make sure that everything goes right. So whoever uses our product knows that basically we are the customer as well. So nothing can go wrong to our client without hurting us. So that was the reason why it was a little bit delayed last several years.
And the key thing is the ability of us to go to an operator who's on a different system and tell them about the migration journey, because we have done migrations in all of our jurisdictions. Migration is where the biggest risk is, because everyone is so worried that a large number of their players will disappear because it's not be a great migration. We have done this 20 odd times in different jurisdictions. So it's a well-trodden route for us now.
Great. Now, this question is from someone who's more accustomed to US-based gambling companies. The question is, are the lines blurring between sports media and sports books? That is to say, you watch a game and you'll see maybe there'll be a sponsor that is a sports book. You'll have ads running. I mean, I even saw this myself watching golf last weekend on CBS. They're running, the odds on the golfers on a major broadcast network. Now I realize that, and I'm going to get this in a moment, the US is not a big focus for you guys at the moment, but is that trend also prevalent in the markets where you operate, where there are connections between the broadcasters and then the folks like you who allow people to place bets in the sports?
Yeah, absolutely. Yeah, that was a trend which we saw in Europe 20 years ago. There was a famous situation when Sky Television, biggest sports television in Europe at that point, I'm not sure today. Yeah, they actually acquired the small betting business in UK and turned in several years into top 3 sports betting company out of nothing in UK, which was very difficult. It was most competitive market in the world. So the Sky Bet was the first that they did. It's actually Sky Television through Sky Bet. There was a lot of attempts in Europe after that to make something similar, but the catch was regulatory framework. So because in Europe you don't have unified gambling regulations throughout European Union. So every single jurisdiction makes its own. It's a little bit like US. Confusing. So after Sky Bet did what they did, nothing else after that was so successful. But US is basically what we see in US. Similar patterns are happening with ESPN and so on. So there'll be a lot of attempts, and especially there is another segment that regulators in a lot of jurisdictions tend to restrict advertising around gambling. And that is the reason why actually gambling companies tend to go into media segment just to secure somehow their position when it comes to advertising. So this is another thing that we see. And we also run, for example, Meridian has biggest online sports magazine in Southeast Europe called Meridian Sports. So it is like the best sports magazine and the best video YouTube portal with hundreds of thousands of followers, which we have. So we are very, very also in that segment, investing in media, but not in traditional and mainstream media. We are investing in media which you can find on social networks. So basically, every jurisdiction we operate has Meridian Sports, has some kind of YouTube presence as well, with podcasts, TV shows, and so on, related to sports. So we are quite big in that as well.
And the other thing worth pointing out is they got a very famous basketball team called Red Star in Belgrade, and it's called Red Star Meridian, or Meridian Red Star. I got it right around. So every time it's mentioned on TV, and it's a very famous team, very popular sport in Serbia. So we get mentioned all the time because of that.
That's really an interesting answer. I didn't realize there was that much to it there, guys. We got time for one or two more here. Someone is asking about the prevalence of bonuses being offered, at least among the U.S. operators. Is that prevalent in the markets where you guys are focused? It would seem that those bonuses reflect a lot of competition and can hurt margins. So I guess the question is, what do you make of those bonuses, and do you see as much of that in the big markets where you guys are?
Yeah, bonuses are huge. So this is, I think I spend like 30% of my time daily, speaking about bonuses and trying to manage it properly, because it's like inflating all the time. Well, in general, betting companies have two issues. Actually, gambling companies. First of all, you need bonuses or free spins or some kind of promotions for retention purposes. So there is no way how to retain the customer except giving something for free. So that is what we are daily trying to focus and try to improve our retention processes. That's number one. But something what happened last several years is that governments are trying to tax bonuses. So we have a lot of regulations which are now happening all over the world, and the governments are saying, look, you can do whatever you want, but you cannot put us in the same basket with you to deduct taxes with bonuses. So that is what is happening. So we've been taxed on bonuses as well in several jurisdictions. So we need to be very careful now how to not overspend when it comes to bonuses, because they become taxable, and the governments are monitoring them as well, like the cash. And on the other hand, you need to retain the customer, and there is no other way except of giving bonuses and free cash and free money and promotions and spins and coins and whatever we do now. So we are really spending a lot of time trying to invent new ways how to retain customers, and the second time how to actually pay as less taxes as possible on the same way. So it's a constant game, and it's becoming really challenging one. That was something what 10 years ago nobody paid attention to. Actually, customers didn't need bonuses, and if you give them something, it's something what was like a minor thing on your balance sheet. Now it's huge, significant. And I saw companies going to bankruptcy with not properly managing bonuses, and actually bonuses, we call it customer compensation, because now bonuses are just one part of the compensation scheme of the customer. So it's really complicated and difficult, and it's uncharted territory. It's something what you cannot take anyone else to learn from. It's like something what's new for us as well.
Well, it sounds like you spent a lot of time studying this, Zoran. You got it right. So, gentlemen, just one last question here. This is a big picture one, maybe for William or Zoran or any of you. But for investors who are accustomed to investing in domestic U.S. casinos or gaming companies, what are one or two good reasons to consider looking at a much more geographically diversified company like yours? I mean, obviously you get the diversification, but is there something different about the markets? Maybe William, this is good for you, that you would stress that makes it an interesting investment opportunity for folks who might only be familiar with domestic companies.
So I think one of the key things they get from us is significant diversification. Diversification not only from different countries but different continents, and every single continent is going to be reacting at a different way at all, kind of from economics or anything else going on there. So that's the first thing you get from us. So I think that adds. Also, the other key factor is we operate in markets where we believe that your cost of acquisition is lower than your lifetime value. So that is our focus. And a lot of the operators in the US, particularly in the initial days, were giving out the lifetime values were lower than the cost of the CPS, cost of acquisition. So we really operate where even though it may be the ultimate lifetime value of the player is individually smaller than the US, but the actual cost of acquiring that player, we need to make that profit. We just get more of those. So I think it is the diversification. It's the fact that we in a lot of the countries we're in fact, most of the countries we can offer them everything. We can not only offer sports, we can offer casino, which is unlike the US, where there's actually restriction in certain markets. So those all added advantages, a greater product mix, greater flexibility on that side, and also the fact that geographically diversified, and the fact that the cost of acquisition is lower because the lifetime values are lower. But the key thing is making sure that lifetime values are way higher than your cost of acquisition. Zoran?
Yeah, and as we announced many times, we are quite busy in getting into US. So we will not treat US as something. It's our home market. It's and I hope pretty soon will be good news about it. So our strategic plan in the next 10 years, let's say that America as a continent will be number one driver of our revenues. US, Canada, Mexico, Brazil. So they will surpass Europe, I'm sure, in the next 10 years. So
that's why we got the US listing.
All right, I think that's sorry, Zoran, go ahead.
Yeah, our main goal with US listing will not just to be listed in the US, actually to start the operations in US. That's it. It's the most difficult market in the world, most competitive market, biggest companies in the world. So we are approaching this carefully, especially being like a very conservative company. We are doing this very carefully, but we are there to stay. So it's not going anywhere.
All right. Well, perfect. That's an ideal note to end it on. Gentlemen, this has been a really dense conversation. So lucky to have all three of you, William, Rich, and Zoran. Thanks so much for explaining the rebranding and telling us a little bit about the company's future. This has been terrific.
Thanks very much.
Thanks for your time.
Have a good one. Yep.
Bye.